What is going on, you guys, and welcome back to the video. Brandon here with today's video, which I know feels probably like a big change up as of recent with Mark. I've certainly been slower on the posting schedule as maybe our long-term viewers may have recognized, I'm sure. I even had a funny thought. I was like, do the new subscribers of our channel even know, who I am or if I exist? I'm Mark's son, by the way. Brandon, for those who are new. But yeah, it's been about 8 months since I did the last portfolio update. And I wanted to dive in, basically open up the hood and show you guys exactly how things are looking. There's been some changes to the portfolio. A lot of it's status quo, and more so that you guys can just see kind of like the updates and holdings. And obviously I got a couple cool announcements as well, which I guess, before we dive in to the portfolio, very exciting. If you guys are in any of these cities and are interested in coming out to the events, we met so many of you guys last year. I think there's over 1,000 or 1,200 people that came out across our, Canada-wide tour with Blossom, which is our app for those that don't know. It was incredible. And these events they're exhausting to plan. They're a lot of work, but they're the most rewarding, and it's just an incredible night to meet so many of you guys, fans, community members, investors. So if you are a DIY investor, I'd highly encourage you, come out and just hang out with us. You'll see so many of the other creators which you may or may not follow. So Mark is going to be at the events. He's always a big draw. Adrian, Canadian T-shirt, Shay, Joey, there's a huge list of them. There's probably gonna be 15, 20 of the different creators there. We're doing Toronto on such and such date. New York's a one, which probably isn't of interest to you, but Montreal was a blast last year, July 2nd. And then Calgary and Vancouver are later in July, but the tickets are technically available. So would love to see you guys out there if that is of interest. They really are incredible nights. And in fact, just to dive in, we had the rec room last year. Anyone that attended, maybe leave a comment down below and let us know, we thought it was incredible. We had this huge stage and drinks and food and everything. But we're actually possibly considering doing this venue, which for anyone in Toronto may be familiar. I've actually never been here, but I heard it's really, really good. An outdoor space that could house 600, 700 people. With food and drinks, and the ticket comes with a t-shirt and goodie bags and everything. And there's a video right here too, actually, which was a highlight video, but you can kind of see
where can you talk more different
all sorts of stuff. It's a really cool time. But that's long enough of an intro and a plug. There will be links down below if anyone's interested. Let's dive into the portfolio update, and I'll obviously be blurring out a lot of this because there's a lot of confidential information, in terms of account numbers. But from a really high level, we're looking at my TD Direct Investing account. The investments sit at roughly $100,000 of investments. If you add the cash on top of that, the portfolio is sitting at about $120,000 Canadian dollars, which is nice. You will see a pretty big breakdown and discrepancy between the US and Canadian weightings. And I'll just start off with a disclaimer, actually, first and foremost, just in case. I'm just sharing with you guys what I'm doing with my account and my RRSP. This doesn't mean that this is how yours should look. In fact, yours probably shouldn't look like mine, whether it's all individual stocks or you do ETFs or the breakdowns. I'm just showing you guys what I do. And it by no means I'm telling you guys what to do. Always do your own research and due diligence. But I know you guys do, especially seeing the updated holdings and whatnot. But one thing I will point out is I am sitting on a decent amount of cash. So about 12K USD cash here, and then about 3.4K Canadian cash here. This was actually from my recent RSP contribution, and I have been deploying that, which we can actually dive into now. We'll start with the Canadian smaller one. I've recently been buying stocks like TD, TELUS. I actually bought some Starbucks in the US account, and I'll actually shrink this just so you guys can actually get a much better view. You guys don't really need to see me over here. Hopefully that's good enough, but we'll take a look at that in a second. So here is the Canadian account, the Canadian breakdown. I actually separate my Canadian and US within my RSP. This is the smaller one, and you'll see within this, it's pretty much entirely Canadian stocks. I actually own about 5% in fixed income, which I'm thinking about scrapping, and about a 10% allocation to cash at the moment within this 36, value. One thing that you'll see here is there's a very limited number of holdings. So I've been very selective with the Canadian stocks that I own. In this account, it basically is 5 stocks. It's Brookfield, Alimentation Couche-Tard, TD, and TELUS. And Brookfield obviously is broken up into two post-split, but they've been really strong performers for me as of recent. The largest position, if we're just sorted here, actually it is already sorted here by market value, is Brookfield Corp. And if you were to essentially, compile up both Brookfields together, well, that would make it my largest position, and it's one that I'm very confident in long term. But it's nice to see a nice little gain here of about 40% and 30% apiece with this position. It's one that I intend to hold for a long time. Couche-Tard, you've heard me talk about them many times on the channel as well. In fact, I say it time and time again, but I got this suggestion from you guys in the comment section, and I'm very glad that I did, because it's been a favorite of mine, the grocery chain, the Circle K grocery chain. Apple is a stock that I'll highlight here. This should not be in this account. So as you'll notice, it's all Canadian holdings. Apple, obviously not a Canadian holding. For whatever reason, the TD platform hasn't been friendly with me, and it just lives in this account. I've tried to transfer it multiple times, and it doesn't really bother me anymore. But one thing that I do think is just fascinating is you see the return on it, and it's posted a really, really great return, 361%. Of course, this is because I've just held this stock for a really long time. It was one of the stocks I've bought as an early investor, and you'll see the cost basis, or the book cost, is not anything too big. It was $1,000, which, I probably backtracked 6 years ago. Those were probably the accounts dollar figures that I was working with for a balanced portfolio. And we look at it today, and it's right in line with my other holdings. So it's one that I'm happy to keep where it is, and obviously just been a good benefiter of Apple's growth over the years. And then we have TD Bank, Brookfield again, TELUS, arguably the one in here that I'll probably get a lot of pushback for, which I know a lot of people aren't a big fan of TELUS at the moment. I actually just went in and bought more TELUS a couple of weeks ago. So you guys know, my belief on the stock market is that companies, industries, they go through their ebbs and flows, and they come in and out of favor. And hey, I could be wrong on this, but it's my belief that TELUS is going to be just fine long term, really the entire telecom sector here in Canada. So when these stocks do come down as far as they have, in the case of TELUS, although I'm down on the position, it's obviously offering a really nice dividend, and I'm happy to scoop it up here. And then I do own a bond fund which has performed poorly, obviously how interest rates have done. And in all honesty, I do treat this somewhat like a cash balance in my account. Again, it's not a massive amount, but it is one that I may look to sell pretty soon. But this is probably the less exciting one, at least in my opinion. I think the US account is always more exciting with the holdings. And you'll see, as I mentioned, this is a significantly bigger weight in the portfolio for me. And this is in US dollars, of course. And the cash balance is sitting at 12.2K. So I still have a lot to deploy and to put to work. And I have slowly been putting it to work. But in all honesty, I've just been so busy with life and work and whatnot that I've just been very selective with where I pick and choose to deploy this. And it just makes me feel comfortable to have a bit of cash at the moment. Not saying anything, about the markets. It's just I'm kind of fine with that at the moment. But here you'll see, in terms of the allocation breakdown of this portfolio, it's almost exactly 80% invested in equities, and then about 20% in cash or cash equivalents. It is literally just in cash in this moment. But the goal is to get this, invested, but certainly a bigger weight than the Canadian market. Double the size of the Canadian market, even more so, and that's very strategically how I've decided to build this account. That's something that I'm very comfortable with. But to look at the holdings, we have this here as well, just ranked in terms of market cap, so my largest positions. The largest position today does sit at Google, which has been another great performer for me over the years. I was actually having some doubts with Google going forward. I don't know if anyone's been following Alphabet and keeping up with some of the rumors about their AI, the Google search engine. Chatting with Dan from Stock Trades, and he brought up a couple really good points that Google is undergoing a lot of changes with their search engine, and arguably not for the good of the user, is more just to inch out revenue, and that's something I don't necessarily like. So it's been one that I've had my eye on, an eye on. And don't get me wrong, I don't want to make any rash decisions, but it is something that's just like top of mind. They're essentially like arguably making the search engine results worse because it's actually better for ad revenue and it's better for the advertisers, which is just it's not what you want to see, in my opinion. And then YouTube, obviously, I don't know how the future of YouTube and whatnot, but we'll see. Visa is another one that's just been a steady trucker performer, up 37%. Realty Income was one that I've recently bumped up. So you'll see this is my third largest position amongst my US holdings. That wasn't the case. It was a lot smaller down, but with the stock ETF or REIT, actually dropping pretty significantly, I chose to bump that up again. Very similar logic with TELUS, looking at maybe the weaker sectors. There's certainly a lot of issues, in my opinion, and very probably fair issues with the real estate outlook going forward. But this company again it has just a tremendous track record, and I do, as a long-term investor, try to overlook those kind of shorter term woes. And obviously you're getting a really nice dividend, which is nice. This portfolio, as you'll see, like, I very much consider myself a hybrid investor. So you're going to have some growth stocks that don't pay a dividend at all, but you will see a lot of dividend stocks, and in particular like dividend growth stocks. Those are the stocks that always pique my fancy. Starbucks being maybe a good consideration of that, which is another stock that I've recently been bumping up as well. Another stock that has a lot of polarizing opinions on at the moment. But nevertheless, these were two that I've personally been adding to. Tencent, you guys know the history there with Tencent and Alibaba. Two of my worst ever performing stocks, but it is nice to see that these stocks have gone on a bit of a run. So it's seemingly, I think over the past few months, the past 3 months, Tencent in particular has gone on a really nice trend upwards. We'll see if that can continue. We have Johnson & Johnson, which is not been performing well for me. It's just been trucking kind of flat, in fact actually dropping down a little bit. But this one I almost think might be a little too conservative for me as a 29 almost 30-year-old. I can acknowledge that, but it is a stock that I'm just also very comfortable holding as well. Amazon certainly in the growth department, but that one's done well. This is another one very similar to Apple, where because I bought it so long ago, you have a really nice gain on it. But it's kind of funny to see this cost basis is less than $1,000 put into the stock, and then obviously it's more than tripled since then, or close to tripled since then. Cisco, another one that's trading flat. This one has been ebbing and flowing, but another long-term hold for me. And to sports, one of my other Asian companies, a little less known company, but a big clothing brand out in China. FedEx, Tyler Technologies, Coca-Cola. Here we're getting into some of the smaller positions in the portfolio. So this one, even total market value of the account is less than 1,000. So more on the smaller side. And then two essential of the duds, which are I guess I would say these ones, they've performed poorly, but they don't worry me all too much. These are stocks that it's in my opinion, over the next 10 years, I'm optimistic that they'll do well. And this is just one of those dud periods. These are just like the dud bad picks, poor picks from my end. And SoFi was one where I got caught up in the hype of the meme stock. It's something that I often don't do. You guys know, right? Like, I'm usually very disciplined when it comes to that stuff. But it was also, you make your mistakes, and I thought, okay, well, I'm gonna try this play on a small cap meme stock, and again, small dollar figure. You'll see it represents basically a percentage of the portfolio. Put in $1,000, and it's basically got cut in half since then. So it is what it is. Probably should sell that, but it's also one that I'm just fine bag holding, if you will, for now. And then Snapchat, $183 invested. Another one that's performed poorly, which you guys know my story with that one, was the one and only IPO that I ever bought, and it's one of those ones that I just learned a lesson on, and I hold as a reminder, but it's really insignificant in the portfolio at $152. Reminders, like with Blossom, of course, you can see this all, the whole not the whole concept of Blossom, but one of the many perks or features of our app Blossom is that you can see exactly what I'm investing in, live time, right? So if you don't want to wait for all these portfolio updates that come every so often, you can see mine along with many other creators. So you'll probably recognize a lot of these in the Canadian space, some of the biggest names out there, but more so it's just like a social media, if you love, being surrounded by investing in DIY investors, I encourage you to download the app if you haven't already, because it's completely free. It's literally a free app. It's pretty crazy to think we've gone from, when I joined Blossom in the early days, like a couple thousand users, to now 130 plus thousand. It's really taken off steam. And again, that's why, you know, also a big effort and lift has been planning these events, which again would love to meet you guys at if you're free and available. Just come meet the community and see what they're all about. But yeah, I'd encourage you guys to check it out. Actually, super exciting news for like the OG followers of the channel. You'll know PPC Ian, who is, you know, someone we've collabed with for the past 5, 6, 7 years of YouTube. He just joined Blossom this week. Joseph Hoag's another OG in the investing space. A lot of names that you probably would recognize, and it's really, in my opinion, cool that they, you know, are willing to be transparent and sharing their portfolios and trades. Again, not to copy, which again I'll say as a disclaimer for this video, is not to copy my portfolio, but just to show what other people are doing, right? To get insights and see kind of what's happening out there. But anyways, guys, that will wrap it up for the portfolio review, and obviously exciting news about the events coming up. Like I said, it would be super cool to see you guys and meet so many of you there. If you're able to attend, there'll be links down below. And yeah, you do still have like a month or so to get those tickets, because they're in June, late June, and I think early July. But I'd encourage you to get them soon, because pretty confidently these will sell out like last year. In fact, even more likely. But yeah, there's my quick little update for you guys. Wishing you all the best, and yeah, it's I hope you guys are all doing good and doing well. I'm doing really well. I've just been so busy, and you know, making a big priority on health and life and like balance and everything. And you know, filming videos. Mark's been doing such a great job of you know, providing value and content on the channel, that he's been lifting heavy on that end. So I know you guys appreciate that so much, and it is nice to just check in every once in a while. So I hope you guys, if you guys do appreciate or enjoy, give it a thumbs up, and leave a comment down below. I am actually very active on Instagram. So surprisingly, although I've been posting less on, you know, YouTube here, like I'm posting every day on short form content, and Instagram in particular. So certainly follow me there if you haven't. I'm always checking my DMs if you guys want to say anything. But yeah, I'll wrap it up there. Thank you guys so much for watching. Let me know what you think about my portfolio. Again, do your own research and due diligence, because this is just what I'm doing. Could be right, could be wrong. It's probably almost certainly not right for you to just be copying what someone else is doing. But I hope that gave you some insights into, I guess, a live update look on how my stuff is looking. Thanks, guys. See you in the next video.